Now, your money masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. This is Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us. We get the Dow Industrials flat. The S&Ps are up a couple of bucks. NASDAQ is up 8. And bottom line is that this market, is hanging up there, but
it is.
There's no conviction on the upside. Bulls don't have the conviction. Bears don't have the conviction.
Yeah.
Bottom line is that we have volume at those October and
That's right.
August lows. So it's a matter, folks, of how this roll comes in and who is going to go with the conviction first.
Yeah, yeah. For sure.
What is kind of intriguing here is that the Facebook IPO, I mean, that's no doubt going to be huge. And, I expected this morning in particular that the market could have been up, 200.
Yeah.
I swear to God. Last night when I was leaving here, I says, they're going to pump this baby up, and it would just make sense. But, they couldn't do it. Europe basically rolled. Asia wasn't bad.
No, Asia, you had in Asia, you had, everything was up. When I say everything, the Nikkei, Shanghai, Hang Seng,
right.
Finished positive. You got the FTSE's just slightly positive, up 8 points right now. DAX is up 32 points.
You get a lot of red on the other side. What's that other screen you got there?
Here?
No, the one that was just behind the ups and downs.
Yeah.
Oh, I see.
Yeah. So this is just showing us the most the most active down list. Right now you got Chipotle that is down about 1%, down $5. But leading the charge on the way down percentage wise is Transcend.
Look at Abercrombie.
Okay.
Abercrombie's down good.
Yeah.
That's that. And what's interesting about that too is that I know the Gap come out with numbers and they were good.
Okay.
Man, that's got to be the toughest business in the world, the clothing business.
Geez.
I mean, what's amazing, folks, is that you think a clothing business, it's by quarter. I mean, they either, make something for a dime and they sell it for, 20, $30.
Yeah.
So either make it or break it, man. I mean, it is pretty wild. There's no doubt about it.
Yeah, you talked about an inventory management kind of a nightmare business, I would think. Because there, you've got not only do you have fashions, right? You've got seasons.
Yes.
Your spring, winter, summer season that you've got to, and you're buying that stuff in advance. You're buying that stuff out a fairly decent amount. So that's pretty tough business at all. Tom can't hear. Well, we'll just keep going anyways.
Yeah.
Out there, and they'll in the den. I think in the den they're struggling to hear us, folks. So. Okay. Now, what you were talking about the IPO.
Right.
Is this really a public offering from the standpoint that Zuckerberg, his control of the voting shares.
57%.
Yeah. That's not a public,
That's right.
I mean, so your investment is absolutely 100% in him, not the company.
Oh yeah, no doubt about it. No doubt
it's not like investing in Apple. Yeah, Steve Jobs, maybe a larger shareholder out there, what have you, like that. But he still didn't control the voting rights of the company.
No, exactly.
So it's that's a really wild one.
Yeah,
don't you think?
Oh no, it absolutely is. And if the company is powerful enough, that is the way that you want to do it.
Well,
that's just how it
goes. You'd like to be able to do it, from a personal standpoint. Yes, absolutely.
Right. And the amazing part, folks, is that he was dealing, no doubt, with some of the toughest negotiators in the world. You can imagine raising money over the course of those 8 years. Yeah. And he managed to hold on to those voting rights, and that doesn't happen. Most of the time, they lose quite a bit of it. You know what I mean?
Yeah.
So
for sure,
it's going to be wild watching it. And the ad revenue, I guess, the thing that is amazing though is this: we got to do the math on this. So what you're paying for, folks, is this. What they think it's going to go out at is this: 27 times gross. That's what they think it's going out at. Okay. So that's gross sales.
Yeah.
So you're going to pay $27,000 for the right to get 1,000 in gross sales.
Yeah.
That's pretty intense. They better grow, how many people are in the world? So they got 850 million right now.
Yeah.
Well, they're not in China yet.
I don't know.
They're not in China yet, so there's probably another couple billion in China, easy.
Yeah.
You know.
Nice to have a customer base like that.
Oh my God, unbelievable! That really is just amazing. There's no two ways about it.
Yeah. So you got MasterCard is up here, $23. I'd have to go take a look at what they had released. Here, let me see here. They must have released earnings earlier. MasterCard EPS 14.85 versus 14, so that's why they're up $20 or so. If we take just a quick look at MasterCard, let's go punch that up here, and let's put up the symbol MA. And take a look at that. You know, they get this thing coming. Oh, it's already up. It's almost up over the swing point. So it's coming into this swing point here from December the 2nd. MasterCard.
Right.
And that only has 931,000 shares. You're coming into it already with 1.3 million. So this thing's got some.
Well, you know, you get those small fees off every single transaction.
Yeah.
It is absolutely amazing. There's no two ways about it.
Yeah.
And the amount of money it adds up, I mean, is just astronomical.
Yeah. Now, isn't that a nice looking chart there? Everybody in this thing is in the money.
Look at that.
You know, if we really have, if there is some juice behind the marketplace, you know, and when you get into a real bull market, you know, that's when you really want to start looking at stocks like these everybody's at the party.
Yeah.
You know, everybody's made some money.
Right.
You know,
who's going to leave first? No, but there's no doubt about that. You know, that the way that the money business has gone, it is absolutely amazing, though. It's all plastic. Oh, listen to this. Hey, folks, any of you folks that are thinking of shorting bonds out there, well, you better put your hands in your pocket and wait for quite a while.
Okay.
Okay, so check this out. This, folks, is over the top, but this is what's going on. So we're at that 144 level anyway, right?
Yeah, right.
If we break the 144 with conviction, meaning 500,000 contracts, folks, it wants to go to 160. Now, that's just on a technical basis, right? But listen on a fundamental basis what's going on. On a fundamental basis, right, short-term treasuries have continually, about the last 7 or 8 months, been negative.
Okay.
Negative rates, meaning that you're giving money to the government to hold, and it's costing you money for that.
Yeah, which is crazy.
Okay, but you know, you can get your money back. See, no one knows where to park the money. Think about it. They don't know where to park the money.
Yeah.
Because people are taking the money. They're saying one thing. That's what that's all about. That's all it's about.
Yeah.
In May, the Treasury is going to make a decision. Now, right now, the Treasury does not sell negative rates to the primary dealers. So the way it works, folks, you get the Treasury, you get the primary dealers, then you get everyone else, right? So it has to go through the primary dealer. They just passed the first, let's say, it's not a regulation, that they're thinking that they will start selling negative rates now.
Really?
Yeah. So that, check it out, this is amazing. That the auction rate itself. So now the way it goes is an auction rate, okay?
Yeah.
And it's not against the law, but they don't do it. But they're thinking that, yeah, you know what? The market is saying they want negative rates.
Yeah.
Well, they don't want to get in the middle of the market. That's what they're saying.
Yeah.
So they're basically going to do it.
That's crazy.
Now check it out. Because when they do that, let me tell you something. When they do that, oh man. Forget it. It's negative rates.
Yeah.
And folks, that is deflation, by the way.
Yeah.
You know, in spades. You know, so we'll see where that shakes out. That very well, you know, what would be really neat is that, let's say if they pass it in May, and they say, okay, the first one's going to be, you know, like September, October, whatever that is.
Yeah.
It'd be really intriguing that in between that, you get the 30-year go to 160.
Yeah.
Market goes to 825. They do the negative rates, and then rates are going to the moon.
Yeah.
Right? No, I mean, you know what I mean?
Yeah.
But they plan on
definitely want to take advantage of low rates from a housing standpoint.
Oh, it's huge, man. It's huge. There's no doubt about it. Yeah, but it's huge. But I suspect there's going to be. It's pretty wild.
Yeah.
There's no doubt about it. Negative rates. Who would ever think of such a thing? I will give you money and just hold it for me, and you're going to charge me for that right.
Yeah.
But you know what's so funny about it?
Well, we'll do that.
I know.
I'll do that.
Absolutely. But then what are we going to do with it?
We'll make money.
Yeah. Well, no, you know, the thing that's intriguing, let me tell you, the thing that's intriguing is this, is that during, you know, when all those banks are going bankrupt, right?
Yeah. Right.
Think about how we were running around.
Right.
I mean, we were pulling money everywhere. Do you know what I mean?
Yeah.
It's like, okay, man, so you can see if you have millions and millions, you know,
sure.
what do you do with it?
You mean like if you're, how many billions is Apple sitting on?
That's right. Exactly. 97 billion.
Yeah.
What do you do with it?
Yeah.
Because all it takes, to picture it, you know, you have the CFO there. All it takes is one mistake.
Yeah.
Put it in MF Global, poof, 1.2 billion gone.
Yeah.
They had 5 billion there. Of course, I would have took that too.
Yeah. No question.
I didn't do it. I didn't see anything. I don't know anything.
Hey, it was a great interview you had yesterday.
Yes, thank you. Yeah.
You know, you've been bringing in some good folks.
Yes. Yeah, we're going to have, actually, on Thursday, tomorrow. Tomorrow, folks, I have Chris Powell, who's the head of GATA, which is the organization that has been taking these guys to court forever about the manipulation of the gold and silver market in J.P. Morgan Chase.
Okay.
So I have him on, and then I get Bill Murphy coming on the 14th. And then we're going to get a couple more of these regulators on. You know, The thing that I thought was intriguing, what Bart said last night, is that the rule thus far has changed, but it's not changed regulatory-wise yet, so that someone can only have 10% of the contracts in the futures market.
Yeah.
Now, the argument's going to be, and I suspect the banks are pushing back big time, what is the definition of a swap?
Yeah.
And this is where, folks, it gets totally non-transparent, and what ends up happening about the non-transparency is that it's done on purpose, okay, so that they basically, you know, they don't want the market or anyone else know what they're doing.
Right.
So they can make more money. And, you know, we'll see whether they can basically, you know, crack that part of it.
Yeah.
And, you know, if we've seen anything, the longer you put anything off, the more that you can crack it.
Yeah.
Right?
Yeah. Oh, absolutely.
This is Steve Rhodes, Tom O'Brien. You stay right there, folks, so we're going to be coming right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume and the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while actually reducing your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns, making missed opportunities a thing of the past. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us. We have the Dow right now up 10. S&Ps are up 3, the Nasdaq's up 13, and you know what? This is Groundhog Day.
It is Groundhog Day. What did Punxsutawney Phil come
I don't care what he said. I'm going to throw that radio away.
Is that it?
Yeah, this is just like this is a Groundhog Day from 3 years ago.
That's funny.
Creeping.
I love it.
Yeah, totally.
I love it.
Groundhog Day.
Hey, it's
man.
not creeping in the oil market. You had light sweet crude trading off right now.
Oh yeah, we like that.
93 cents. And it's coming up against a little bit of a support area from a Fibonacci standpoint.
Right.
61% retracement, 1.272 expansion rate out here at $96. But where do you think light sweet crude is headed down to?
That biggest swing down there at 91.
Right in here?
Well,
yeah.
The reason being is that yesterday, see the expansion in volume yesterday?
Right,
you blew away the swing point with yesterday.
Yeah.
So it's like, okay, the fib number's holding at this point. But
right.
Give it another hour and a half. Because you can see that the volume has expanded dramatically.
Yes, it
That's
has.
today's volume, right?
It is, yeah.
It's huge, man.
It is.
I mean, look at all day. You're already at what? That's
293, yeah.
1,000 contracts. And yesterday only did 350.
Yeah.
Oh, yeah, they're going to blow that thing away, man.
Yeah. But, and you only got King Dollar is, let's see here, King Dollar's up six ticks. Only up 6 pennies.
Yeah.
And what is interesting on the dollar index is that, let me get to the right chart up here. On the daily chart on King Dollar, it has held that 1.272 expansion. Just keeps hanging out down here.
Right.
Just keeps hanging out.
Yeah.
So, and that expansion is coming off of this little butterfly pattern out here. So see if this thing holds.
Now, what's really interesting is that, so when you're looking at butterflies, right?
Yeah.
You were explaining this yesterday, that when you do a butterfly, it seems that the contraction, in this case, we're selling a butterfly, comes down more.
Yeah, it does, yeah. It's obviously not going to do it overnight.
No, I understand. I understand.
When I trade a butterfly,
right?
I'll look for exit points along the way where I'll start to take bread off the table.
Yes.
The first one is that 618 area.
Okay.
In fact, until when I'm trading a butterfly, I don't really like to adjust my stop until it has gotten to the point 618.
Because that's smart. I know.
Because when you get to the point 382,
right,
it can easily bounce back and,
that's
and
nothing.
test that area.
Right. That's nothing. Absolutely.
And so
and they do.
They do. That's right.
With big tops and big bottoms, they do.
That's right.
They absolutely do. Right.
So you want to start adjusting your stop when you've gotten a sweet 618, if you will.
Right.
And sometimes that's as far as it'll get.
Yes.
But you can take a look at the size of the bar, but you just start to tighten the stop or take a little bit of, your receivable off the table. But oftentimes they will
your
go.
receivable.
Yeah. Well, that's if you start thinking like that.
No, it is. It is. Yeah. Absolutely. It is.
If people start thinking like that,
that's right.
Then all of a sudden it kind of changes into that this is your strategy.
No, it does.
That it becomes your business strategy. And look at the number of folks that you've taught over the years.
Yeah, no, I know.
Right?
Yeah.
And if you could just teach them just that one thing, which is to take that money off the table.
And then what you do, folks, is this. This is what's so cool, too, is that once you really get your head wrapped around that, and I know many of you know the story, and this story goes back to me paying, my children's tuition when they were even in grammar school.
Yeah.
Now, of course, they're out of school now, so it's a field day. But what ends up happening is that what you want to do also is that then you buy what you want, you just buy it. So what ends up happening is that you don't have any debt.
That's
and then
right.
every single time, whether you get in a car, or you get in a boat, whatever you do, it doesn't matter. You can just whatever you want.
Yeah.
And it's cool because in that context, you're not thinking about it anymore.
Yeah.
And then you get rewarded every time you.
See, that's the key.
Yeah.
What you just said there, that word reward, is so important. If you're and you just take a look at folks who will spend time, if they're dog lovers, if you will, right?
Yeah.
How much time and look at your dog. Look at the amount of time, energy, money that you've put in there.
Yeah.
But is a reward a big part of that training?
Oh yeah. Oh, it's all reward-based training.
Okay.
The whole thing.
Well,
the whole thing.
Just as life needs to be as well.
Absolutely.
Right? Even this morning, I was talking about how when we
my car's named Doug.
I love it.
D-U-G, folks.
I love it. Mine's named Dig. I was the other side of the train.
Totally. That's right. You could have been on any side of that train. I know, man. I know.
I love that. But even this morning, because when we came back from New Year's, what seems like forever ago, 4 weeks ago, what have you, I started working with folks and just trying to take a look at what rewards do they want in their life. Some were shorter term, longer term, what have you. And even this morning, I talked about the importance of, if you've got, let's say, a dream car that you want,
right?
And let's say you're trading right here, but that dream car, maybe it costs $50, $100, $150, $200, whatever it is, the car that you want. There's almost not any car that you can't go out there and rent for a day.
Oh, that's right.
So
Cool?
when you've made some money, go out there. If you want a Bentley, go out and rent it for $300 for the day. That's right.
And once you get the taste, folks, you're done.
It's like Hotel California.
You're done, baby. Steve Rhodes, Tom O'Brien, you stay right there, folks. We're coming right back. The Dow's off 1, Nasdaq's up 2, S&P's, Nasdaq's up 12, S&P's are up 2. We're going to be right back.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley of Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Folks, Steve Rhodes, Tom O'Brien. We get the Dow flat. Let's see, S&Ps are up a couple. You get NASDAQ up 12. Some of the...
Russell, though. Russell was leading the way.
Up and down?
Up. Yeah, up right here, up 4 points right now, up 0.5%.
Okay, so that's going to get interesting. Let's see. So you had one spike.
Well, this is the 10-minute chart we've got on the IWM.
That's it.
But that's the close. It's coming into the 4 o'clock time frame, and no real volume, at least behind today's move just yet.
I like that little trade right up at the top right now, though.
Yeah. Ooh, baby.
Get the shots on!
I love it.
Hey, okay, so I want you to walk me through the position sizing calculator.
Yeah, okay. The way that it works.
First, walk me through what it's all about first, because folks, this is really cool to understand. Okay.
Yeah. Well, the first element is really understanding your basic probability of risk.
Right.
Okay. And what happens is in order to get clarity, I like to be able to put some things down on paper.
Yes.
First visualize, and then put it down on paper, see how it works. And so I had started this exercise 30 years ago. When I was working in a CPA firm.
Right.
And we were taking a look at, that was when IRAs had just come out.
Okay.
So it was about 3 or 4 years after the IRAs had just come out. Interest rates were about 15%.
Yes.
But
huge.
we wanted to be able to show our clients that they should be putting away, at that time I think it was like $1,500 a person into an IRA. And so the idea was that the partners there wanted folks to be putting their money into the market. Back then.
Okay.
All right?
Right.
And so the idea was, how can we create a strategy that minimized risk but maximized return? And that was the entire thought process behind it. Well, what we found was that just simply by risking 1% of your trading capital, that was all you would put up as a risk.
Yes.
That, you would have to lose like 300 and some odd trades in a row to take your capital from where you were at to zero.
Okay.
But yet what you could do is if you risked 1% of your capital, you only needed, and if you were just getting a 2-for-1 return on your trade versus 3-for-1 or what have you, you only needed like about 18 or 20 trades to have almost double your money. Can't remember what the exact number.
Amazing,
it's like 35.
right?
I think it's 35 trades. So now you started off with how many in a row to lose. I mean, that's not how trading works.
It makes a difference. That's right.
But it was still initially just being able to get clarity. So when you put that down on a piece of paper, you realize that you could overcome your fear, because at first, when the partners that I was working with were trying to create a presentation for the client base, was people were simply afraid. People have always been afraid of the markets because it's something that folks don't understand. Right. Yeah, absolutely. Even there are times when, heck, we don't understand it. Right. Okay? But we understand how to trade it and probability management or what have you. And so when you put that down on a piece of paper and you realize that you can eliminate a lot of that fear by just simply playing a game of probabilities. Yeah, and that's where it's at. Period. Yeah, I'm with you. So that was the first base. That's like building a base in a stock, if you will. Okay. And when people can start to accept that, then they start to empower themselves to they can get into the market, because the whole idea was the fastest way to wealth was and our clients worked real hard. Right. And for their money, for their business. You know what it's like. You know what it's like in a business. Everybody's business looks a lot easier than it is. Right. No, absolutely. And so you want to make sure that your money is working just as hard for you. Right. And you still want to be able, so that's where it started from. What the position size calculator did was say, let's come up with a tool, because I used to do all these calculations in a spreadsheet. I'm a spreadsheet guy. Big time. Okay. Huge. Right? Huge, folks. And the idea was, how can we create watching them, too. How can we create a tool, not just for ourselves, but really for the listeners, if you will. Yes. To be able to identify what their position size should be. Right. How many shares they should get. And it's easy calculation, so you can do it if you want, by hand. But the other thing was, and this even came out in my live webcast yesterday that I do for my clients every other week, folks, is the question is, how do you determine stops? Yes. Well, each of us have different ways, right? We take a look at a swing point and say, if it closes below this area, we should get out, because it can drift down to the next higher and next lower swing point, right? What I did, folks, is I've just simply taken what I call the average true range. When I identify a stop, I'm aware of the swing points. Right. But my approach is that I can't control what the market is going to do, and if it dips just below the swing point, if you have a blow off, which does plenty of times, exactly. Right. And and I learned this the hard way, folks. Because the hard way for me was believing that I saw a swing point or whatever it was, and I put my stop rate just on the other side. Right. Right. And so I learned it the hard way by being right on the trade but getting stopped out. Too early. So it happens to all of us. Sure. So I just simply use the average true range, which I just simply use the exact average of the last 10 trading sessions. Okay. And when I know what that is, I say to myself, that is the daily noise. That's the daily volatility. That's cool. And it resets itself in essence each day. Right. And when you know that and you use that, what ends up happening, you still take the trade. It means that you're taking fewer shares. Right. Okay. Yeah, because it spreads more, which is cool. It doesn't matter. Yeah, because it's really all about a game of being able to make money, a business of being able to make money where the odds are in your favor. And so then when you do that, when you use that, now I don't just use the average true range. My clients know this morning, we're taking a look at some trades, both long and short. Yes. And this morning I came in and based on yesterday's activity, I went ahead and adjusted our buy stop into an equity that we're looking at. Right. By taking a look at because we were inside the average true range. Okay. And so that order would likely have been filled today just because of the normal noise. Right. But because of the lack of conviction on the upside of the marketplace, I didn't want to be in the I want to be in the market when there's conviction, right? Not when it's drifting. Yeah, does that make sense? No, absolutely, right. Okay, and at this stage, even with raising our entry point and being outside of the normal range, so if we're in the trade today, it's because there was extreme volatility. And because I've taken that's right because there's at least price conviction. That's cool. Yeah. Okay. No, absolutely right. And price conviction is another way to take a look at it. Now look, if there were to be a blow off top. Okay, we could end up being on the, real quickly on the wrong side of the trade. Yeah. Okay, but we'd end up getting stopped out. Right. But, typically you'd see those coming early in the morning. So, futures like you were saying, futures could be up 200 points. Right. And then you could say, okay, how am I going to deal with this.
Right. Right. No, absolutely.
So and how folks can also use it is when you get to your target. Okay, so let's say you're trading an ABC.
Yes.
But you're not sure if it's going to be a 1-to-1, right? I think it's, what is it, 40 or 60% of them turn out to be a 1-to-1, and then the other 40% in essence may do something more. They may go to 1. I mean, I never calculated
it, yeah. But most of them are 1-to-1.
Okay.
You know.
And so what you can do there, maybe you've taken some or all of your bet, or maybe you've came into it. If you come into your D point, you know, with a gap or a large, a wide-ranging bar, you can say, hey, maybe this is going to get more juice in it.
Yes.
And what you can do is you can use a trailing stop, and you can adjust it each day just simply by the average true range. Then you can just set it right underneath it, or just a tad, underneath it. And folks should really, they should, in my opinion, especially in a volatile market. I mean, we're in a super volatile market, and to me that means that you have to have your stop wider than normal. See, a lot of folks will say in a volatile market, I want to tighten up my stop. That's the normal thinking.
Right, you can't.
It actually needs to be, you know, the exact opposite. I find most of the time that what I try to do is, if I'm presented with a problem, something to figure out, my first instinct, you know, whatever decision I come up with, I then step back and say, now what if it was just the exact opposite?
Yeah, exactly.
Okay,
no, exactly.
What does that mean?
Right.
You know, and it's the same way that I like to be able to.
And how you operate, which is cool. Right.
Yeah, and that way it's not really different thinking. And I learned that where I got that was from IBM, and because in the computer days. When it was a bunch of us young folks that were out there.
Yeah.
I mean, we're talking 30 years ago.
Oh, totally.
You know, what did we really know about business other than nobody else really wanted to be in the microcomputer, the personal computer business.
Right.
I mean, back then, the thought process, remember, this is back in like 1983.
Yeah.
And the thought process was that, you know, we were envisioning seeing a computer in everybody's kitchen. Back in 1983.
Okay.
That was, you know, we opened up these retail stores. That didn't pan out. It panned out today.
Oh, yeah, big
right?
time.
There's computers or iPads or what have you, you know, and people. So it finally did happen. It just took a lot longer, if you will. But IBM was one of the larger resellers of ours.
Yes.
And so we would go to meetings, but they also sent some of us to a Harvard Business School for just a short period, for a weekend.
Yeah, right.
Big, you know, immerse yourself.
Yeah.
And that's really where I had always thought like that, but didn't understand really why.
Yes.
But they cemented it.
Right.
Because their whole strategy, their whole business strategy is to go full bore, solve a problem, and believe that they've got the right answer.
Right.
But it was really Watson. If you go back and you read about him, he said, okay, now how did we just lose it? Why? What did we not think about?
Right.
And then what did we not think about was thinking about it, just reversing it. What's the opposite? What is the opposite thought process that we should have had? Because what happens is, you know, even when we show up in the markets and we're taking a look at screens, you know, we show up with a belief. You know, we take that belief to the screens, and so what I like to be able to do is step back and say, well, what if the opposite is true?
Right.
You know?
No, I'm with you. I'm with you.
So to me, that's a long-winded story, folks, but it is really what's behind understanding the position size calculator.
And you can get it for free, folks.
Yeah. Just
subscribe to your newsletter for a month, right?
Oh, if you can get that for free just simply by going to the homepage. It's still up in the carousel.
No, you got it made.
You know,
And get over there.
Absolutely. But you know, my clients, they use it. That's what they use to identify their position size.
Yeah,
no matter what size, whether you're trading with $1 million or $10,000. You know, you still trade with that.
Yeah, no, and it's a cool tool, folks.
Yeah.
Particularly because it puts it all together, meaning the position sizing with the true range inside it, and you know.
And the ultimate tool for me is which you know we've started working on is where we're able to take the position size calculator and make that an auto trader, if you will. The whole idea is to find a way to be able to create a tool where you know, where you can have it do everything for you, because time, you know, it's really all about time. You know, the one thing that we can't, you know, money you can get in a heartbeat.
You don't get the time back.
Man, time's a precious thing.
Well, I told you,
precious commodity.
Folks, last night, I'm having a blast last night. I'm walking with my dog, whether it's 1, 2, 2:30 in the morning. I'm saying to myself, why do I even want to sleep anymore? I swear to God. I was laughing. I says, oh, man. I says, come on, O'Brien, knock it off. Because I know I get on these tangents. You know what I mean?
Yeah.
And what ended up happening, and years ago, folks, I was convinced, right, that it made no sense to go to sleep, right? And this went on for years, right? And of course I go to sleep. You need sleep, right? But at that point, that was the first time last night that all of a sudden something just, came into me.
Yeah.
I said, hold it. Why am I going to go to sleep? I said, I'm not going to go to sleep. And folks, it was beautiful out anyway, So I'm hanging outside, and Angie said, I said, no, I'm going to hang out here for a while. I'm going to probably go take a walk.
Yeah.
And all of a sudden, I says, you know what? Why am I even going to sleep? That makes no sense.
Yeah.
So I woke up this morning. I said, oh, man. And I was working out with Nico. And so I was telling Nico, listen, he just said, listen, man, you need sleep. And he's right. But isn't it funny how your mind just, and I felt great. I got 4 hours sleep and woke up and I felt good. But it's funny how it works.
Well, so an interesting story. And Nico, maybe he could talk about this on Friday. And what I have found is that, especially one of the things that especially our listener base, we are really trying to find more time in our day.
Yeah.
And the question is, how can you get enough sleep, but not more sleep than your body actually needs?
Because you want to operate, right?
Okay. And one of the easiest ways to be able to find just a little bit more time, if you want to try to educate yourself or get up to prepare for trading the market or what have you, is really watching what it is that you eat in the evening. Because what happens, while you're sleeping is your body is processing all that food.
Right.
So if you can eat lighter, water-based type of foods in the evening time, your body's not going to need as much. You're going to wait. It doesn't need as much energy.
Man, I killed a cow in my backyard last night.
Baby.
I ate a half a cow.
Well, you got to do that for lunch.
I did too. Oh my God.
At least that's what I find.
No, you're right. You're absolutely right, man. There's no doubt about that. It's
just being resourcewful.
Yeah.
It's being resourceful. So let's see. So you got the small caps. That's what I've got up here on my screen.
Yeah.
Trading out at its highs at 81.41 right now.
And it's over that 786, so, man, that wants to go. Oh, what a trip this is, man.
Yeah. It is. It's over the 786. I mean, that's where it closed yesterday. Now the question is, but no, still, no juice. Volume today, 11.9 million shares. We're a little over an hour into trading. So you got 60, 70 million shares, something like that. That's what it did yesterday.
Yeah.
Just and on the downside, what it's going against, 97 million shares from July 27th.
97 million.
Where the cascade. And July 27th is really where the cascade really started because, up inside this top area, you gap down. So you actually have an open gap up there. I get rid of some of these colors on the screen here.
It just might go up there and say,
see, right
good
here
morning.
You've got this open gap.
Yeah, look at that. Right.
And that seems like where it's headed. And that's where, like I say, you had 97 million shares there. That swing point's got 56 million now, which you're right into right now.
Right now, so you get the Dow up 10, we get S&P's up 4, NASDAQ is up 16, and, the Apple's still not moving. Apple's just going sideways, too.
Yeah.
So it'll be intriguing to see just when are they going to,
Apple's scary because of that big gap that's open. And,
yeah.
To me it is, because Apple, I went back, I don't think Apple's got any gaps in it.
Okay.
In the stock. So it's going to be filled at some point.
Yeah. Any gaps, gap up?
Any gap up opens, yeah.
Okay.
Yeah.
Steve Rhodes, Tom O'Brien, you stay right there, folks. We're coming right back. The Dow's up 14, NASDAQ is up 17, S&P's are up 4. We're going to be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We get the Dow right now up 15, Nasdaq's up 17, S&Ps are up 4.5. And don't forget, folks, coming up next, we're going to, this is a great day, man. We're going out the Wild West.
Coast,
we're going to Santa Fe, New Mexico first with Kate Stalter, the Small Cap Roundup. That's 11 to 12 Eastern Time. And then we're going to Tucson, Arizona. We're going to go get some boots out there with our man, Mr. Larry Pesavento, from 12 to 1. And you should see Larry, folks. He has a horse outside his backyard. He's got his cowboy boots on. He's going to kill me.
I love
it. He's 12 to 1. And then we're going to stay out there. We're going to go from there right out to, Thousand Oaks, where Ken Shreve is.
Beautiful country out
That's
there.
right. 3 to 4. And then we're going to back here to Tampa, 4 to 6.
Yeah, I'm loving it. So you got the euro. Euro is, right now is just coming up into the highs from January 30th.
Okay.
And, what the euro's got some real strong resistance in that area. You had a 0.382 retracement all the way off of October 27th. What's so crazy is, on October 27th, you pull up almost any chart of anything.
Seriously.
And
Huge
it just really kind of sticks out at
It does.
And so it's only done a 38% retracement off of that. Done really a 0.786 retracement off of December the 2nd, but off of this swing point right here, 1.272. So now, if it does clear this area, what it says, the euro will go ahead and bounce up to the 0.618,
which is huge.
So now you're talking about getting up into the 134 area, 136 actually, 136.
Yeah.
Off of that move. So
right.
If this area does. Again, we're looking for, as you say, the volume. If you just simply take a look at the markets, it's all to the downside.
Yeah.
Well, this has been just a little bit of a drift, little cut.
Yeah, no, absolutely, man, no doubt about it.
But underlying, it's not there.
There's no conviction.
That's the problem. We went underlying. In fact, we were taking a look at Chipotle, folks, just during one of the breaks. Let me pull that up here. The symbol on that is CMG.
CMG, yeah.
Yeah, so CMG. And what's interesting, great looking run that this thing has had. Trading out at 365. And, for a stock that was trading down as low in November at $39. How about that?
A 10-bagger.
39 to
10-bagger for a restaurant.
Yeah, for a restaurant. But what's interesting, folks, is that what you have to do is you've got to come back to any chart and just simply take a look at the high-volume bars. I was telling people during my 9 o'clock show, one of the reasons that I'm really here today is because that's what was happening with some of the stocks in my portfolio. I wanted to understand, why did they do this?
Right.
And as soon as you showed me that, which was the easiest thing, was just simply understand where your exposure was, that's where you really understood being able to make sure that you had some good stop management in place.
Big time.
Because, it doesn't necessarily have to happen overnight, but we know that things can happen. But in the case of Chipotle, its first line of support is at $268.
Right. I mean, at 365, folks.
Yeah.
And that's what Steve's talking about there, is that when you actually understand that it can go there, it makes you put a stop in. And what I've also found, which is really cool, is that, and that's what the fib numbers do. I just said you did the 0.382 to 618.
Yeah.
What happens there, folks, is that if you use these percentages, that's a monster. That's like this big. It's huge. And that will make it's like, oh no, it's going. And that will make you put stops in too.
That's right.
It should. I mean, once you see it a few times, you can say, oh man, hold it. That can go there. It's like, oh no, hold it. I'm not taking that kind of heat.
Oh no, exactly.
Yeah.
Well, that's why that your stops and you use the average true range or what have you. I mean, there's ways to truly protect yourself, and what you got to understand, this is not about being right.
Right.
This is absolutely not about being right. This is about just simply owning a business. Owning a money management business.
That's right.
Collecting your receivables when you can.
No doubt about it.
Yeah.
You stay right there, folks, because we have Kate coming up next, Larry Pesavento, Ken Shreve, and then we're going to be back here. This is Steve Rhodes, Tom O'Brien.
Have a great day, folks. Live with gratitude, and I will see you tomorrow at 9 a.m. Of course, you'll see him. 4
That's right. 4 o'clock. We're going to be right back. We get the Dow up 13, NASDAQ up 16, S&P's up 4. Have a great one, folks.